Edmonton housing market, October 2023. What is going on? That is what we're going to discuss in this video. I'm going to cover detached homes, the market as a whole, half duplexes, apartments, townhouses. We're going to look at each segment and exactly what's going on in each one of those segments of the housing market, because the picture is a little bit different depending on what property types and price ranges you're looking at. I've got a lot of value packed into this video for you. We'll talk about prices. I'll talk about some specific segments, like for first-time home buyers under $350. A lot of exciting stuff. So let's jump right into it. All right, so we'll start with the bird's eye view of the market as a whole. So this includes single family homes, half duplexes, residential attached, townhouses, and apartments, all just kind of smushed together. So it's gonna be the least useful in terms of making specific decisions in your life. But let's take a look at it. It's sitting at an absorption rate of 29.25%. So the market as a whole is balancing right between a buyer's market and being a balanced market. It's just right on the cusp there. That is a slight decrease from last month. In August, it was sitting at 33%, so it's ticked down a little bit. Not really surprising considering that we're getting further into the fall months and things often start to shift a little bit. Now, the average price for the market as a whole was sitting at $376,449. That's down 1.64% from last month. We're still down for the year, down 5.05% in 2023 so far, but that's just the average price. Later on at the end of the video, as I mentioned before, we'll get into the benchmark pricing, and that's a lot more useful. Now, the number of active listings at the end of the month was sitting at 4,910, and there was 1,436 sales. So the number of active listings was up 1.3% from August, but still down from last year. We've got just over 16% less inventory than we did at this time last year, and the sales are down 10.36% from August, but up 32.59% from September of last year. So same story if you saw my last video. The inventory is down compared to last year and the sales are up. The market's actually performing a little bit better than it did last year, believe it or not. Average days on market was sitting at 44 days versus 47 days in August and 50 days last September. And then in terms of the market distribution, we've got a little under 20% below the 200K mark, just over 17% between 2 and 300,000, just over 24% between 3 and 400,000, and almost 19% between 4 and 500,000, and just over 10% between 5 and 600,000. Then there's about 5% between 6 and 700,000, and then it gets quite small from then on out. All right, switching over to the detached home market, often a crowd favorite. This is sitting at an absorption rate of 29.3%. So again, very similar to the market as a whole, just in between buyers and balanced market. The market conditions are going to vary depending on the price range that you're looking at. If you're looking in lower price ranges, it's going to be more competitive and it's going to feel more on the balanced side than on the buyer's side. Whereas if you're in higher price points, like north of 500,000 for sure, I would probably say it's going to be more of a buyer's market in most market segments. That's a little bit of a drop from August when we were sitting at a 31.32% absorption rate, but not a significant change. The average price for detached homes was sitting at $488,124, which is just down 0.94% from August, but up 2.67% from September of last year. And then the average price for the whole year, so this is taking into account all the sales for detached homes throughout 2023, it's still down compared to 2022. So it's down 2.46% from 2022. Now, actives and solds for detached homes, there was 2,659 active listings at the end of the month, and there had been 779 sales. Listings were down 2.49% from last month and down 27.98% from September of last year. And the sales were down 8.78% from last month, but up 33.39% from September of last year. Inventory's down from last year, but sales are up. Even though interest rates are higher, you would think that that would cause less transactions to happen, but the market, in terms of the number of sales, is still performing relatively well. Now, the average days on market was sitting at 42 days versus 44 days in August, so a slight dip, nothing huge. And it was sitting at 46 days last September. Market distribution, you've got barely anything under 200,000. That's 1.42% of the market, 9.1% of the market between 2 and 300,000. Second biggest segment between 3 and 400,000 with 26.17% of the market, And the biggest segment was between 4 and 500,000 with 27.83% of the market. Now, I've noticed a lot of first-time home buyers are in the $300,000 to $400,000 range. Because of the higher interest rates, a lot of the first-time home buyers I've been working with in this last year, especially since the interest rates have crept up, often have pre-approvals under 350. Unless they've got dual incomes, then that can usually push them up. But if they're on a single income, then a lot of them are under 350. So that under 350 market segment for detached homes is pretty competitive. You got a lot of people out there looking for a good home that feels like good value. It's got a good mix of bedrooms and bathrooms. It doesn't need too much work, that kind of thing. So what I've found looking at those properties is that the ones that don't need work, like the roof's good, if the furnace isn't ancient, if maybe the windows have been replaced, plus not a horribly out-of-date bathroom, still functional, maybe not a completely renovated house, which good luck finding that under 350, but a partially renovated one that's still livable and doesn't have any major expenses coming up. Those are the houses that go real quick and are often getting multiple offers right now, for sure. If you're under 350 and it's a good one that comes up, a lot of those houses go quickly. A lot of the houses that are in that price range, though, don't really fit that criteria. So there's a lot of those listings where they do need a new roof, or the furnace is on its last legs, the windows haven't been replaced. And a lot of these first-time home buyers, they're looking at those properties and they're not really seeing the value, or they just don't have the means to really take on those big expensive projects. They want to leave their extra cash for buying furniture and having a bit of a buffer there. So I've found most of the first-time home buyers are not looking for properties that need a lot of work. And unfortunately, the ones that don't need a lot of work are pretty competitive in that price range. So a little bit of a sidebar conversation there, but that gives you a little bit of insight on what's going on in that segment of the market. But yeah, between 4 and 500,000 is technically the biggest segment, but that's going to probably include a lot more second-time home buyers, at least for the ones that I've been working with. Then between 5 and 600,000, you got 17.3% of the market there, and between 6 and 700,000, you got 8.57%, and 7 to 800,000 is just under 4% of the market. Then you got just over 2% between 8 and 900,000, and goes down to less than, or well, around 1% for the next segment between 900,000 and $1 million. That's it for detached homes. Let's jump into the next segment. All right, semi-detached. So that's going to basically include half duplexes. So that you've got a neighbor on one side, but you're not a condominium. Those ones are still titled like a single family home, but you are sharing a wall with your neighbor. That market is sitting square in the middle, balanced with 40.39% absorption rate, dipped from 51% in August, where it was right on the cusp of technically being a seller's market. It's dipped a little bit, but it's been quite strong the last 3 months since I've updated my infographics and started tracking this a little bit better. Don't have further history on that since it's still just this year that the Realtors Association of Edmonton started splitting out those stats. Average price for half duplex was sitting at $355,734. We'll skip over the rest here because those stats will be skewed. But right here, you can see at the end of the month, there was 359 active listings and 145 sales. So the first takeaway that you should get from that is this is a relatively small part of the market. I think in the market as a whole, we had somewhere around 5,000 active listings, and we're talking about under 400 of those being half duplexes. So you could see how an uptick in sales or an uptick in inventory in this small market segment could cause big swings in the balance of the market. But the number of active listings are up slightly from August, up 2.28%. And the number of sales are down from August. They're down 19.89%. So that explains the shift in the balance of the market. Just a little bit more inventory and 20% less sales, and you get a decent shift there in the balance. Average days on market was sitting at 36 days versus 46 days in August. And you can see the market distribution here. Very few of them under 200,000, 1.72%. Almost 20% of them between 2 and 300,000. You're going to have some trouble finding decent stuff in that range. It's probably going to be older. And the biggest segment between 3 and 400,000 with 43.9% of the market. And then between 4 and 500,000, we had just over 25% of the market, and almost 6% between 5 and 600,000. And then it's very small from there. So usually if you're looking for a half duplex, it's going to be between 3 and 400,000. Let's jump into the next segment. All right, row/townhouse. So this includes townhouse condos and what we call residential attached, which is single family titled. So they're a very similar property type. Main difference is one's a condo, one's not, but we lump them together because the actual property itself has a lot of similarities in most cases. So this market's also pretty balanced, sitting at 38.26% absorption rate. That dropped from, I think it was 54% in August. Average price for this type of property was sitting at $263,589, which is up 5.28% from August. We're sitting at 541 active listings and 207 sales. So again, it's a little bit bigger than the half duplex market. A good chunk more listings and a little bit more sales. Listings are up just over 4% from last month, and the sales are down 26.6% from last month. So again, a bit of a shift there. The average days on market was sitting at 41 days versus 43 days last month. And you can see that the market distribution here is slanted more to the left than on the last one. So you've got a good chunk of them under 200,000. So you got 34.39% of it under 200,000. A lot of those townhouses under 200,000 are going to be older. They're going to be built in the 60s, 70s, maybe 80s. Usually the ones that are between the $200,000 and $300,000 range, you can see that's technically the biggest part of the market. That's 35.12% of the market. That's where you're going to find stuff built more like late 90s, early 2000s. And then once you get into the stuff that's built in the last 5 years or so, or brand new, a lot of those end up being north of 300,000 unless they're on the smaller side. So that $300,000 to $400,000 range is sitting at 26.58% of the market. And then the $400,000 to $500,000 range drops like a rock down to just over 3%. The townhouse condos also tend to be a little bit cheaper than their equivalent residential attached non-condominiumized townhouse. People do usually pay a bit of a premium for not being in a condo, and there's also less of those available. Most of the townhouse type of properties available in Edmonton are condos, but we are seeing some builders bringing on more of these residential attached property types, which is a good kind of go between half duplex and detached home. They tend to be a little bit more expensive than the condo townhouses, but usually a little bit cheaper than half duplexes unless they're bigger, and obviously cheaper than the detached homes. So that's it for that market segment. All right, now we've got apartment condominiums. This was sitting at an absorption rate of 22.58%, so it's performing the worst in terms of the balance. It's more of a buyer's market for apartment condos, as it has been for all of recent history in Edmonton. If you could look at the balance, how it's gone over the last year, it's never really gotten into balanced market territory. It's always been a buyer's market for the last year. Average price for an apartment condo was sitting at $177,663. which was down 6.42% from August and down 2.16% from September of last year. Those are averages, wouldn't really give them much weight. Active listings, there was 1,351 active listings and 305 sales. So in terms of the actual inventory on the market, they are the second biggest segment next to single family homes. Single family homes looks like they were like detached single family homes. There was, I don't know, just over 2,600 of those, and the whole market had just under 5,000. So you can see that the biggest segment of the market in terms of the inventory was detached homes. The second biggest segment is the apartment condos with 1,351. So still, there's significantly more of these available than there are of half duplexes, residential attached, townhouses. All of those are rarer than apartment condos. But the number of sales in apartment condos is not great, 305. Like, that's comparable to, like, there was over 200 townhouses that were sold, and there was 145 semi-detached. So if you combine those two together, you actually have more sales than there was in apartment condos, even though there's a lot more apartment condos available. And I can tell you there's also, I would call it almost like shadow inventory for apartment condos, where people would love to sell their apartments, but they go and they get an evaluation, they look at what other ones are listed for in their building, and they're just not happy with the numbers that they see. So they sit on them because they might have bought it for a lot more, or it just doesn't feel like it's worth it to sell. So that market has been depressed for many years now. I have a hard time seeing that changing anytime soon, just because I think there's a bunch of that sort of shadow inventory. As soon as prices come up a bit, I think there'll be a new wave of people listing it, which helps keep prices down. But nothing wrong with apartment condos. It's just a completely different ball game here in Edmonton compared to Toronto and Vancouver. Average days on market was sitting at 54 days versus 58 days in August, and 60 62 days in September. So based on that, slightly lower. You can see the biggest bulk of the market is under 200,000 with 67.22% of the market. And then you've got 23.86% of the market between 2 and 300,000 and 6.4% of the market between 3 and 400,000. Then you just got a teeny little 1.34% between 4 and 500,000 and very low numbers for anything above that, which would essentially be a high-end luxury condo. If you're selling an apartment condo, you have to be extremely realistic on your listing price. Even if you list it and it's like the best value condo in your building, it still might take a while to sell. I've seen this happen over and over again. If you want to sell, you basically have to be the best price listing in the building. Otherwise, you won't get any attention. But even if you are, sometimes you don't get any attention. And if there's no recent comps, the values might be a little bit lower than what you saw 3 or 4 or 5 or 6 months ago. And it's definitely a challenge. You're not typically going to have people busting down your door to get you an offer and buy your apartment condo. Whereas if you're buying an apartment condo, you've got a lot more to choose from. A good chunk of them you'll probably feel overpriced. And that kind of goes back to what I was telling you before, where there's a lot of apartment condo owners that are just not happy with what the current market values are. So they either don't list the property or they do list it at an inflated price that has no chance of ever selling, essentially. So it's not uncommon to see condos that have been on the market for 6 months or more where they just keep relisting it or it just sits there. It's kind of weird. Like, even though there's a pretty decent amount of inventory, like I don't even know what percentage of it, but there's a good chunk of it that'll just feel overpriced and not even worth looking at. So there still could be some frustration on the buyer side, but you just got to search for it and find those people that are motivated and, got to get it sold one way or another, and you could probably find a pretty decent deal on an apartment condo. So let's jump into benchmark values. All right, benchmark prices. If you're trying to track actually how values are changing, this is probably one of the best sources of data that we've got. It's a lot more accurate than the average price since it's tracking a consistent property description and type over time versus just, whatever the highs and lows combined and averaged out ends up working out to. So the MLS Home Price Index, the benchmark price for the city of Edmonton for everything was sitting at 373,000, which was up just barely, up 0.1% from last month, technically down 0.8% from last year. And then over here on the right, you can see the benchmark price trend and how it's basically gone from last year. And it kind of feels like we just went in a circle compared to last year. We're technically down a little bit, but things started dropping, or they'd already started dropping by September of last year, but they kept dropping into the winter months and bottomed in January and then worked their way back up, peaking in June. And then we took a little bit of a dip in July, and now we're kind of bumping along sideways. So is the same thing going to happen this year? I don't know. Interest rates are pretty dang high, so it's going to be interesting to see how things progress. Like, so far, the market actually seems to be performing much better than it was this time last year, as I showed you in the stats. Sales volumes are up in, I think, pretty much all categories of properties by a pretty decent amount compared to last year, while the inventory levels are down. So based on that, if that trend continues, I don't think we're going to see as big of a dip this winter as we did last winter, but I like to keep an open mind. Anything can happen, just not seeing it yet. But it is softening a little bit, but that's also pretty normal for later fall market, especially now that we're halfway through October. Now, benchmark prices for other property types. For single family homes, it was sitting at 443,000, which was the same as last month and up 0.4% from last year. And then apartments were sitting at 177,000, which were up 0.5% from last month and up 0.6% from last year. So technically apartments are up a little bit, and townhouses are up too, sitting at 234,000, which was up 2.6% from last month and up 2.3% from last year. So interesting combination of realities that we've got going on with the market. So that wraps it up for the Edmonton housing market update for October 2023. Hope you got value out of this video. Make sure to like and subscribe. If you click over here, you can subscribe, and if you click over here, you can watch another video. All right, I'll see you next time.